This is Pedro, a 27-year-old Swiss real estate agent from Lausanne, moving to Luxembourg City. The housing prices in Switzerland have been rising at an annual rate of around 3.7%, mainly because of immigration and limited supply. Moreover, the imbalance between housing prices and income is relatively significant, and despite newly implemented housing projects, the market remains incapable of keeping up with the high demand. Following his move to Luxembourg City, Pedro has conducted some research about the city's housing market. What he found out is that housing prices have increased by 135% over the last 10 years, making the city one of the most expensive markets globally with an average of €10,000 per square meter. This increasing trend has been present in every single annual quarter between 2010 and 2022, showing strong economic consistency. This dynamic can be traced back to a significant imbalance between high inelastic demand and insufficient inelastic supply. Having learned this, Pedro wanted to understand why the prices are so high, yet demand is not declining. After analyzing the market, he has come to the conclusion that unchangingly high demand is mainly driven by a rapidly growing population and its high income giving the people high purchasing power. Furthermore, the state is promoting the purchase of real estate in the city by keeping the interest rate on loans low at around 1.28% in 2024, making it easier for young people to take out loans. A low level of property tax and political and economic stability drive the demand even more. Due to a geographical limitation, as Luxembourg is relatively small and high construction costs, since the construction site workers have a high income, Luxembourg's supply, which is inelastic, is not able to meet the rising demand. Although the supply is very inelastic at the moment, Pedro knows that this can change with time. As the housing prices have been going through the roof, Luxembourg has had to react by implementing subsidies in order to curb the annual increase of prices. Historically, Luxembourg has invested very little into social housing, making it take up only 2% of the housing stock. However, Luxembourg was to change its approach by providing €480 million for social housing between 2024 and 2027, making it their main incentive to try to control the housing market inflation. Apart from residential housing, it stands out that office space takes up a significant part of the real estate market in Luxembourg, seeing as it is one of Europe's main locations for international corporations and financial institutions. These companies are ensuring a high and stable demand for office space rentals in the city and are also a main driver for the low vacancy risk throughout Luxembourg's real estate market. After giving himself enough time to think about it, Pedro has decided to invest into the real estate market in Luxembourg. Although the buying prices have made him shy away initially, the promising future and return on investment has convinced him to look into buying real estate. Despite knowing that the opportunity cost of buying an apartment or house in Luxembourg will be high, he is sure that it will be profitable long term. Moreover, the city's strong economic stability to global financial challenges, relatively low interest rates, and low vacancy risk make it even more attractive for young people to invest into real estate in Luxembourg. Although investing into real estate is attractive for Pedro, he is aware that not everyone would be able to afford to do so. Therefore, he is of the opinion that the Luxembourg government should implement a public policy that would contribute to making housing more affordable to the general public. A policy he proposes would introduce a progressive home ownership tax, which would target those who own multiple real estate properties primarily as an investment rather than residential use. The framework of this policy would maintain the standard tax rate on the primary residence while adding a surcharge of 20% for secondary properties, where the owners do not reside for the majority of the year, and a 40% on any other additional ones. Those who rent their properties to eligible ones get a 10% reduction. In order to encourage productive use, to maximize efficiency and social benefit, all revenue would go into a housing expansion fund to support first-time buyers and finance new housing projects. This approach treats housing as a basic need, not just an investment, promoting fairness and sustainability in Luxembourg City.